Welcome back to the Robert Stone Club channel. Today, we're dissecting a fatal pattern in crypto. Look at that Bitcoin logo cracking and splitting right down the middle in the dark. That's what happens when a project has a brilliant story, but literally zero real support. It's a ghost ship, and it's destined to sink. So, let's dive into this explainer and see exactly how this trap gets set.
According to reports from CoinDesk and Cointelegraph, the controversial BIP-110 Bitcoin upgrade proposal just entered its mandatory activation phase at block 961,632. The result? A pathetic less than 3% miner support. 3%! Imagine a massive ocean liner relying on a tiny, sputtering, smoke-belching lawnmower engine. That's exactly what launching an upgrade in a heavy computing network with under 3% backing looks like.
And the math? It breaks down violently. CoinDesk reported that the breakaway chain inherited Bitcoin's full mining difficulty, but had almost zero hash power to actually solve it. Picture those glowing blockchain links violently stretching under the pressure, turning burning red and then just snapping apart. The fork managed to mine exactly 2 blocks before completely stalling out and dying.
Now contrast that microscopic red blip of a dead fork with reality, a massive, soaring green bar of institutional adoption. The real Bitcoin network is dominating. Cointelegraph and CoinDesk reported that during that exact same week, spot Bitcoin ETFs saw net inflows of between $853 million and $1 billion. Think of heavy institutional bank vaults rapidly filling with green liquidity. That's where the real economic engine lives. Identifying this trap is absolutely crucial. We call it the ghost ship pattern. It's manufactured social media FOMO masking a total lack of fundamental support. You see an empty ship hull drifting in those dark waters, and from a distance it looks real, right? It hits a major public milestone, but underneath, no engine, no crew. It's a deliberate trap, designed to leave retail investors holding totally worthless assets when the momentum inevitably dies. Because when that engine fails, the collapse is brutal. A steep, jagged red chart plummeting straight down, completely shattering the glass floor into the abyss. Remember May 2022? The Terra Luna algorithmic stablecoin ecosystem failed under market pressure. It was heavily hyped as the future of decentralized money. But when that algorithm collapsed, an estimated $40 billion in market value was wiped out, literally in a matter of days.
Quick pause. If you're finding this helpful, please subscribe and hit like for more crypto investigations. All right, let's keep going. Picture a glowing digital wallet violently draining all its green contents into a massive, swirling dark void. That was BitConnect. They promised up to 40% monthly returns through a proprietary trading bot, but the U.S. government later confirmed it was a fraudulent Ponzi scheme, taking approximately $2.4 billion from investors. Hype without an engine always ends in the void.
So, here's your survival guide. Ignore the price action. A massive price spike is often just pure market speculation. Instead, act like a targeting laser, aggressively scanning lines of code, locking onto each fundamental weakness before you invest a single dollar. Hunt for near-zero miner support. Expose those anonymous teams. Look for dead GitHub repositories where no actual code is being written. And definitely watch out for communities where legitimate critics are immediately labeled as spreading FUD just to shut down debate. Smart money survives by following one rule. Think of a heavy, cinematic steel vault door locking into place with a mechanical slam. Trust, but verify on-chain. Smart money never, ever takes a developer's word for anything. They use block explorers like Etherscan or Solscan to relentlessly verify token distribution. They physically check the smart contracts to see if those liquidity pools are actually locked. It's chaotic, noisy social media clashing against a solid, impenetrable wall of glowing cryptographic hashes. A brilliant white paper? It's totally worthless without the hard economic and social consensus of the miners, validators, and developers actually backing it up. If that foundational security isn't there, you're literally building a financial network on sand. Look at that single, rapidly fading blip on the dark radar screen. It leaves us with one critical question you have to ask yourself before every single trade. Are you investing in consensus or buying a ticket on a ghost ship? The daily market updates and the community are on Telegram. The link is in the description.